What is up, YouTube, and welcome back to another Rich Financials video. In today's video, we are back with everybody's favorite weekly recap, crazy bets, courtesy of WallStreetBets on Reddit. Some crazy losses, some crazy profits here, and we're going to dive into each and every single one of them. So if you are excited for today's video, make sure you like the video, subscribe to the channel, and as always, turn on those bell notifications for all future uploads. Now, again, remember that the point of these videos here are all for educational purposes. It has nothing to do with putting people on blast. Everybody is anonymous on the Wall Street Bets forums from here. I make sure to cut all the names out. So all these trades here are to bring knowledge and to hopefully bring some insights into the world of finance here. So we're going to get going into the first one here. This first person says, it is not realized if you do not close the position. And he has bought 60 call options on Costco, and he is currently down in this position here, $55,000. And he says it is not realized if you don't close the position. Now, be that as it may, he is 100% correct. You do not realize your losses until you actually close your position out. But he's down currently about almost 50% of his initial investment in Costco call options. And not only that, is the expiration date is in about 1 month. So time is going to start ticking. The decay is going to start hitting here. I don't know how you could put over $100,000 into this kind of trade here, but he did. And then he bought one share of Costco for $936, and he's down there as well. So I don't know what the reason is behind that, but this is a very good thing to keep in mind about. That is not a realized loss until you actually close your position here. Now, with shares, you can hold your shares as long as you possibly need to, but obviously with options, you have an expiration date, so it's not as beneficial to say, hey, if you don't close it, you can't realize your losses. Your losses will come pretty quick on Costco call options if they expire in October 24th. So 100% of his, or $100,000 here. So think about this, right? 1.33% of his portfolio is about $1,000 or so, give or take, which means that his portfolio, you're looking at $1,000, 1%. So he's looking at, probably about $100,000-ish in his portfolio, which I'm guessing it's almost like a full port here potentially as a result of this. Very, very risky we're looking at here. Again, buying these only for about, a month out, it looks like, or so, maybe a little bit longer than a month out, to me isn't obviously ideal for options, okay? Options are usually good for longer term plays, those leap options that go out, 6 months to a year, maybe even 2 years potentially, but very risky. But again, it is true. If you do not close it, you do not realize the losses just yet. Moving on to the next one here. I see your comeback story and raise you, my back is covered in calls. Now, this to me was absolutely crazy because there was these two pictures here. There's 3 pictures, actually. Over the last month, he's up 1,000%, 1,200%, which is absolutely amazing. And I was clicking through it. I was like, oh, wow, look at these gains. Look at these gains. And then look at the last picture over here. My dude is down $335,000 all time. 300. And I was like, dude, this guy's doing amazing. Look at this. Look at these returns. Oh, good heavens. And I don't even know what the trades were, honestly. I don't even need to look at them. But, oh, my God. Imagine basically being down like an entire house worth in your portfolio. All time. I saw that number and I couldn't believe it. I actually was like, I got to step away for a second because this dude was showing these really good gains here. And now he's down to $17,000. Unbelievable. From $350,000 down to about $17K. This is the risk of trading options, guys. Again, we always like to show the losses that you might encounter here. And again, Reddit forum with Wall Street Bets is a very risky platform or a very risky Reddit page to use, right? And it's one of those things where, if you don't educate yourself, if you don't, take the time to do the research and do due diligence and understand what goes on behind the scenes, you could end up like this person here and be down, over $250,000. That's absolutely crazy. Moving on to the next one here. This person has put in $750,000 into NBIS. Now, NBIS, here's where I'm looking at this one. NBIS and Microsoft recently announced a partnership between the two of them. And it pushed Nebius Group, or NBIS, up to over $100 a share at the time of recording this video as a result of it. Because it's optimistic, it was up like 40%. Him buying in at $97 to me, when those stocks have those huge moves, 40%, 50%, 100% move in a matter of a day or a week, what usually will tend to happen is a pullback. That's usually what happens. Okay, these stocks can't just run up forever here. So buying in now at about $98, close to those all-time highs of Nebius Group based off the partnership. Again, it's all, optimism, hopium, excitement, momentum behind it. But when the momentum falls off, when people start taking their profits on this kind of company, seeing these big returns here, then what happens? This person could be left holding the bag, right? So since he has 6,800 shares, I would hope that he's selling some covered calls on his position here above his average price, $100 or, $110, whatever. He says $150 price target. I don't know how much that would be possible because it's about $100 right now, give or take maybe. It's like about $100 or so. You're looking at still a 50% upside return for a profit target. And it's already run up 50% from the announcement with Microsoft. So is that likely in the near term? Most likely not. But he's also up $81,000. So I wouldn't even be mad about selling some covered calls here to kind of, offset the cost basis a little bit more, get some premium, passive income. Those kind of things definitely could help out here. But a $750,000 bet on Nebius Group is actually pretty insane. Again, Wall Street Bets has some heavy hitters with the cash, right? And that's one of them right there. So hopefully it works out, who knows? And again, thankfully, he is up $81,000. He was down $25,000 today. Hopefully he's up $81,000 overall. So fingers crossed that it stays, profitable for him in the long term. Moving on to the next one. Put my entire margin account into Crocs. Huh? I'm sorry. Like the shoe company? Like the ones that make the shoes? Yeah, he did. He put $157,000, 1,987 shares, almost 2,000 shares into Crocs. Now, don't get me wrong. People love Crocs. As someone who teaches at the high school level, a lot of my students are wearing Crocs every single day. Don't get me wrong. People love Crocs. But you're telling me you full ported $160,000 almost worth into Crocs? Not NVIDIA, not Google, not Tesla, not Amazon. Crocs. And you know what? Maybe it comes out nicely. Who knows? Honestly, with these kind of, right now he's down about $6,000 here, as you can see. He's down about $6,000 right now. But, maybe it's one of those things where I know Crocs at one point, I think it was over 100. It was actually over $150 a share now. And it's down close to that 52-week low. So that yearly low, it's down to about $73. And right now it's at $76. So he's trying to buy on the low point. Hey, man, I get it. If you get up to that 150, you basically 2x your money there. But, again, hopefully he's someone who's selling his, covered calls here, offset that break even a little bit. Because even selling a covered call, let's say $80, $85, whatever, you get out of this with a profit and you get out of it with passive income as well. So, I'm always going to be saying this when I see someone full pour and a lot of shares into it. Covered calls is your friend. Definitely going to help you out because it helps to offset that risk, especially because right now markets are at all-time highs. It's risky business we're looking at right now. I feel like we're walking on a very, very tight rope right now in this economy. So with us doing that, I think you need to give yourself some downside protection or some downside protection, I guess, which would be selling covered calls to kind of give you some money back. So that way if the shares go down, you still make some money on the way down still. So it's a good little hedge to look at in that case. But yeah, I have not seen someone talk about Crocs on Wall Street Bets in a while, maybe at all. And this person put in $150K into it. So hopefully it works out for you, man. Shout out to you. But, maybe it works. Who knows? Oh, and what week would it not be on Wall Street Bets without Open Door? $133,000 on call options, $9.50 call options on Open Door. Oh my goodness. That is just wild. And again, right now, it's down like 8 something right now. So he's looking at between now and October 17th of this year, it needs to go to $9.50 and then some, probably closer to $10 if I was to guess. Maybe based on what his cost basis was, probably 10 something it looks like maybe. and $133,000. And yeah, he's up. I mean, hey, good for you, man. But I don't know. I think it's Open Door is a risky trade, as we know. It's a meme stock people talk about a lot on Wall Street and stuff like that. It's not a profitable company, but people are optimistic about Open Door and Loan Depot. I made a video about this last week on Reddit, Wall Street Bets, same thing. They're optimistic on rate cuts being good for real estate and those kind of things there. And it's not going to be a short-term play, I think. It would have to be a long-term play for Open Door to really capitalize on rate cuts. It can't just happen in a matter of 2 weeks. And he's looking at about 3 weeks. So, we shall see, I guess, and wait. But again, people are taking their profits. They went from 50 cents in June up to $10 in September. Like, that's an unbelievable return. You're looking at a 20x return here. Actually, probably more than that in a matter of 3 months. People are going to be absolutely taking profits out of this. Will it go much higher? I don't know. I really don't. But, he's got 1,000 contracts out of it. So we'll see. This person said, I hate myself, enjoy. Okay. He's down $23,000 in just one day. Down 63% of his portfolio in one day. Not a week, not a month, not the whole year, not all time. Down 23,000 in just one singular day of trading on Robinhood right now. It's one of those things, guys, 23 grand. You know, like people to kill for $23,000 just to be in their investment accounts and their portfolios. And he just lost it in a matter of just one day. Market opened. Oh my God, look at the money. And then as soon as the day goes on, boop, it goes right back down. It sells off. Whatever the position was, I don't know what it was. He's also now, day trading, has a day trading restriction. So that's pretty unfortunate. Probably because now he's under the 25,000 pattern day trading rule because he lost 23 grand in one day. But that's just way too much leverage, way too much, maybe zero DTEs, too risky place here because he loses over half your portfolio in one day is absolutely crazy to me. Some people make over half their portfolio in a day. Some people lose it, very, very risky. Again, if you're not trading with risk management, it could be very, very catastrophic for you. And this is an example of maybe having no risk management because losing that much in a day is just, you have to be like almost full porting what you got in your account. So, hopefully it recovers for this person at some point. Who knows? But man, that is a tough one to see. This was an interesting one here. Someone said, anybody else loaded up on bonds? So TLT is bonds, and people are talking about loading up on bonds here because, again, markets are all-time highs in this case here. And we're starting to get potential rate cuts, as we know. So if you buy into bonds now and then we get more rate cuts at the end of the year, these bonds become worth more because you're buying it at a higher yield. And now with rate cuts, usually means that our economy is going to start to, crumble and crack and stuff like that. So people were like, what, do you see something? Do you see the market crashing in this point here? But he bought options. He didn't buy shares. It looks like he just got into options, it looks like. Or maybe he does have some shares with some options. I don't really quite know because he covered everything out here. But it's very, very interesting that, nobody on Wall Street Bets has really put in bonds. It's all stocks. And meme stocks and momentum plays and all that. This guy's like, anybody else got bonds, guys? Like, what's up? And I just was blown away by it. Everyone was like commenting like, what is wrong with you? Like, what do you see happening? Because these are, looking at, 3-ish, 4 months out here for the bonds to kind of push up higher, right? So maybe he's being more pessimistic about it. I don't know if I could see the market crumbling in the terms of between now and January of next year. I think maybe towards the middle of next year, maybe towards the end of next year, maybe might have some crumbling for it. But, we always have the holiday rally, usually the Santa Claus rally usually comes at the end of the year here. The president right now is all about talking about how awesome the market is. Will he let the market collapse? I don't really know. But very, very interesting, and it's not bad, say this is like 1 or 2% of his portfolio, he's hedged, why not hedge your portfolio, buy some bonds, diversify a little bit out? I think this is actually not a bad play to have, and what he could do is you could just close this out for a loss and hopefully his portfolio rallied a lot more. So the losses here offset only a little bit of the gains compared to all of his gains he would get in his portfolio. But bonds aren't a good thing to be diversified in, especially right now when markets are all-time highs, because you get these higher bond rates before we get rate cuts and everything else. All that kind of jazz happening in the future. So shout out to you, my friend, for having bonds on Wall Street Bets. Do not let the people tell you that's stupid. It's not a bad hedge. I'm not going to lie. On to the next one. Let's have some fun with Open Door. This is just crazy to me. Again, like the Open Door meme rally is crazy. First of all, again, here's where we're talking about that it is not even profitable. It's at a negative price to earnings, which means that they're not profitable here at all. He bought in at about $8 a share. He put in almost $2 million, it looks like, into it. Because he's up about $250K right now. So he even buy in when it was super, super low. He put $2 million into Open Door at $8 a share. And right now he's up, which is crazy. But like, he's betting big on Open Door to do something very nice. But again, the nice thing about this one is that he bought shares so he could sell covered calls so he can offset his downside risk. I don't know if he's doing that or not. Who knows? But let's have some fun. Oh, yeah, just throw a couple, $2 million at Open Door and just see what happens, right? Why not? You ever just throw $2 million around for fun? That's what he's doing here. But a lot of shares, a lot of possibilities here. Could make a lot of money, could lose a lot of money. Obviously only time will tell. But that's a crazy order. I think that's probably the biggest Open Door one I've seen so far on Wall Street. Is over $2 million into this company. That's wild. But hopefully it pays out for him. Moving on to the next one. We've got another loss here, down $63,500 all time, down about 97%. And if you take a look here, it was kind of not doing much. And then it looks like there's this huge drop recently. Now, I don't know how long this was here for, but man, I hope he didn't just start full pouring a lot of stuff as we kept going through more and more things here. And it's kind of just like that is a cliff dive. It's like losses, okay, stagnant, and then boom, loss. So I don't know if he was playing like an earnings and the earnings didn't work out, or he was playing, the puts for SPY and he got the calls instead, or could be Liberation Day maybe. I don't know what the time date is on this one, but man, that's unfortunate, being down $64,000 almost. And again, this is the thing where they always say 90% of traders lose their money. Only the 10% of traders really keep their money long term, right? And not only that, it's very, very unlikely you beat the S&P 500 and the market overall doing it yourself compared to just buying into an index. So this is another example. Another loan account basically down $63,000. It's just unfortunate, So again, this is why I always say be careful, research, due diligence, risk management. These are all things that are very important to keep in mind about when you want to trade. And if you don't feel comfortable trading, don't do it. These gains you might see on Wall Street Bets could just be a needle in the haystack, and it's very hard to find these huge wins, and you get a lot more losses more than wins. So please be careful with trading. This person, actually, I'm not even going to lie to you, this was crazy. This person made $240,000 on Alibaba here, and he wrote an actual description about how degenerate Wall Street Bets was for him the entire time. He goes something about like, I've been on Wall Street Bets for a couple years, and I've been just gambling and full porting. I'd be down, $10, $20, $40,000. And then he goes, once I discovered leap options and buying leaps on companies that I like, that's where I started to make some money. So he bought these with, 6 months of expiration here, and he's made, $200,000, which is absolutely insane. Now, what he also said after that was he's going to take this money and he's going to put it into bonds and the indexes, and then and he's like, I'm going to get off of Wall Street Bets. He goes, maybe I'll see you guys in a couple of years. So he's now just like, nope, I made my money back. I'm done. I can't do this anymore. So he had a roller coaster on Wall Street Bets, which is why we always say, and the point of these videos is not to blast Wall Street Bets and be like, oh, Wall Street Bets is stupid. There's some very good quality educational information in Wall Street Bets, believe it or not. You have to really look through it, though, and find it, and not just be like, oh, I'm going to fully degen full port this into here because I want to and just see what happens kind of thing. So this person right here wrote a very long thing, and I was really appreciative of reading through it. And he was like, look, Wall Street Bets, if you don't look for the right information, you could fall into this gambling idea. You could be addicted to it, and we'll look at those big 1,000% returns, and you will probably blow your account. So he made the money on Baba. Now he is selling off, and he is getting off of Wall Street Bets for the long term here. So shout out to you, my friend. Congratulations on making $250,000 on Alibaba. That's absolutely amazing. And, your paragraph you wrote was absolutely inspirational, and it's helpful for a lot of people. So shout out to you on that one. Absolutely amazing. Moving on to the next one here. My first loss, devastating feeling, down $85,000 in 2 days, which is $120,000 in Canadian dollars. And wouldn't you know it, Oh my God, it's Open Door again. It's I can't. Open Door. I don't know how many times I can say this to people. Open Door is such a risky play. It is a meme stock. It is a risky play. He bought in at $9, and at this point of him screenshotting it, it was down to $7. It kind of rebounded a little bit, but man, he put $400,000 into this thing. $400,000, and he's lost 85 grand. Now, things to keep in mind about. He bought shares, it looks like. Yeah, he's got shares. So he bought shares. So he's not going to realize his loss. So him saying that it's my first loss, unless he closed this out, which I don't know if he did close it or not, but it's unrealized gains right now. So as long as he doesn't close it and Open Door rebounded back to like $8, I think it was. I could take a look really quick and see and just make sure. I'm pretty sure it's closed around like $8 a share, which isn't too crazy. But the fact that I can't. It's back at 881. So believe it or not, he's actually only down like 17 cents per share. So he actually got a really good, nice market rebound. Because this is a screenshot at the low of the week. But oh my God, dude, get out of this or sell cover calls. Do something. Offset your cost basis. You got to do something here. You can't just sit there and hold this without having a hedge. You need a hedge. Meme stocks like Open Door. I hedge my portfolio, and it's not even meme stocks, and I hedge it no matter what, because right now we're in this uncharted waters here of who knows where the economy's going to go, because the labor market sucks right now and stuff like that, and we're getting rate cuts. Who knows if Open Door will still rally behind it, or if Open Door just gets pulled out, and people are like, nope, and the market crashes, or we get a black swan event. This dude's down $250,000 in a matter of by a month if we get a black swan event, maybe. So hedge your portfolio. Find ways to make it profitable still, or to at least just limit your risk. Because this right now is full port risk, nerve-wrackingness that I would not want to have in my portfolio. If I sold cover calls on it, which you could sell a lot of them, you could sell, 4,000 cover calls or something, whatever it is, he'd be able to at least offset his cost basis even a little bit. And that's what matters. And if you sell cover calls and then Open Door shoots up, say your average cost is $9, you do a $10 cover call option on it, and it goes $10 a share. Oh no, I made 11% on $400,000. You made like 40 grand, bro. Ain't nobody gonna complain about that. Plus the premium stacked into it. Can't complain. Cover calls, great way to hedge, especially right now in this market. This person said, all in, 23 years old, ASST, a $3 penny stock, and my dude put in over $100,000 at 23 years old. First of all, credit to you, my friend, for being over 100K at 23. I didn't have that. I had $100,000 at 29, so shout out to you. But you're putting $100,000 into a $3 stock that hopefully can rally and not be lost. And you know what my advice is going to be, guys? If you've been watching all these videos every single week, you have 32,000 shares, sell some covered calls on that, baby. Sell some $5 covered calls, or whatever. If it has a $4 strike, do a $4 one. Sell some cover calls above this average cost here. Offset your premium. Let's take a look, actually. Let's do the quick math here, okay? I'm going to go onto, let's take a look at this. All right, I'm going to go on to my account here. Let me see here. ASST. Let's see what the options chain even looks like here. Oh my God, it's down at 240. Oh no. He's already down like a lot. The merger deal, legal scrutiny. Oh my God. If you want to trade options though, like say he went like a month out. Yeah. And then they have $4 call options, $3.50 call options. You could do a $3.50 one if you really wanted to. And then what he would have is 3,000 of these things. So he would be able to offset his price quite a bit. Maybe 300 of them. Oh, maybe it's 300 actually. Yeah, I think it's 300. He'd be able to get like, $6,000-ish back in premium to kind of offset a little bit. Imagine getting $6 grand, like just to kind of, hope that goes to 350 and make money on it. Oh, okay. Moving on. What do we know? Another Open Door, because we cannot get away from Open Door. And this person actually realized his losses here. He actually has a market sell, as you will see. He sold at $7.63 for a total loss of $44,000. So he put in $200,000 into Open Door, and he got back $100,000. He lost almost a lot of people's the average American salary in Open Door shares. I don't have much to say besides that's wild. This person says need help. Oh, look, more Open Door. Dude, they're just the week of Open Door. I kid you not. This dude played over $1 million into Open Door, and his average cost is almost $10. Oh my God. And right now it's at $8.80. So he's still down about a little over $1. He's down about $120,000. And he says, need help? Okay. Now, I mean, his portfolio is worth probably about $2 million, because this is about half his portfolio right here. But dude, what are you doing? You're putting in $1 million into a trade, and you say, I need help? What kind of help do you need, my friend? Because you're putting in $1 million into a meme stock and hope for the best. Here's your help. Sell cover calls. There you go. I found a solution for you. Cover calls, 1,200 of them. Let's take a look at the options chain. Why not? Let me see. You want me to help you out? I'll help you out right now. Here's the Fridge Financials, not financial advice. Not financial advice, obviously. What's Open Door looking like for the options chain right now? Let me see. His average cost is $9. So let's say we go to like end of October. So about a month out. $10 gives him a premium of $120 per 100 shares. So that means he's got 1,200 contracts. Oh my God. Let me make sure I'm doing this math right. Let me make sure I'm doing this math right before I do anything else here, because I don't want to lead you the wrong way here. So 120,000 shares, 100 shares per contract. Nope, I was right. Okay. He could do 1,200 cover calls, guys. I'm not even kidding. His credit would be $146,000. $146,000. That's unbelievable. $146,000 on $1 million, and that's if it goes to $10 a share. So you would actually be up 9 cents on every share plus 100. Oh, nope. Moving on. I can't do this. Can't do it. This person put in a lot of money into NVIDIA. Shout out to you, my friend. He's up over $200,000. Now, what's good about this one? He has these call options for December 17th of 2027. That's what's up. Leap options for the win. Shout out to you. Dude's making the money. He put in $900,000. He's up about $200K right now. Shout out to you, my friend. That's all I can say. Thank God someone did some leap options here. And then we go into the last full port of the video, BLND, which I guess people are speculating is the next Open Door because it has to do with real estate and mortgages. And this dude put $400,000 into it. Okay. That's okay. I don't know what to do there. That one. What is this company trading at right now? Now I'm curious. I've never even heard of this company before. BLND. It's like Blend, I think, is what it stands for as a ticker. Let me see. BLND. Blend Labs. It's down at 376 right now. Okay. Anybody say anything about this company here? They're saying it's a buy. Okay, but I mean, who the heck knows? Are they profitable at least? Nope. Negative earnings per share. Not profitable just yet. That's unfortunate. He's at $3.76 a share now, so he's down 25 cents per share times 100 shares, or times 100,000 shares. Oh, he's down like 25 grand right now already, or something like that. I don't even know, guys. That's it for today's video. Thank you guys so much for watching. If you made this far in the video, make sure that you like the video, subscribe to the channel, turn on the bell notifications. I'm going to go take some Advil or something like that, because God only knows what's going on in these markets here. I do hope you guys making money in the market. Thank you as always for watching Fridge Financials, and I'm going to catch you guys in the next video.